You're working from home, building your business, grinding from that spare bedroom, your dining table, or a converted closet, and you're still paying taxes like you're renting office space downtown. Well, what if I told you that room, the space that you use every day, could literally pay you back at tax time? Today, we're talking about one of the most underused but powerful small business deductions out there, and it's the home office deduction. If you work from home and you aren't taking this deduction, you're leaving free money on the table. I had a client, she ran a small e-commerce business from her guest bedroom, and she assumed that the home office deduction was an audit flag because she heard her old CPA say that. The reality is, though, that the IRS actually wants you to take this legitimate deduction. They just want you to do it correctly. Most people fear deductions because they don't understand them, or they're not using proper substantiation and they don't have the documents and support to back it up. But fear costs you more than the IRS ever could. Here's a golden rule. Your home office must be used regularly and exclusively for business. That doesn't mean you can't have a nice chair or decor, but if you're using your dining table for dinner and client work, probably not going to count. Now, the space doesn't have to be a separate room. It can be part of a room, like a corner office setup. The key, though, is documentation. You want to draw out the square footage. You want to take photos and keep notes on how to use it. Even a 10 by 10 area counts. That's 100 square feet that you could be writing off. Now, there are two main ways to calculate the home office deduction. First, you have the simplified method, where you get $5 a square foot up to 300 square feet. That's an easy $1,500 deduction. No receipts required. Just keep track of your square feet that you've used. The next step, or the next way, is the actual expense method. This is one for the detail-oriented. You calculate what percentage of your home is used for business. Then you apply that to the expenses like rent or mortgage interest, utilities, insurance, and even depreciation for your own home. For example, if you use an office that takes up 10% of your home, you can deduct 10% of those eligible expenses. It's a small percentage, but if you own your home, that depreciation can add up fast. Do you use the simplified or actual method for home office? Here's a rule of thumb. If you rent, simplified might win, and if you own, actual could be really good for you. You just got to be aware of depreciation recapture if you do sell the home. So let's talk compliance. The IRS doesn't target people for taking the home office deduction. They target sloppy records. You should have photos of your floor plan showing your business space, utility bills, mortgage or rent statements, and a clear log of documentation, how often you use it, and that it's exclusive. When I help clients prepare their taxes, we want to build a system to track this automatically, so it's not a scramble every single year. And if you get audited, you'll have the evidence, not anxiety. Audits don't scare organized entrepreneurs. They scare the ones who wait until April to get organized, or worse, come an audit. So who actually qualifies for the home office deduction? It's self-employed individuals and business owners. This includes sole props, LLCs, and S-Corps. With those other businesses, you might need an accountable plan for that. W-2 employees working remotely do not qualify under the current law unless they're running a side business. But here's the play. If you're an S-Corp owner working from home, your corporation can reimburse you for your home office expense under the accountable plan. That's a clean and legal way to capture that deduction without claiming it directly on your Schedule C. S-Corp owners, your business can reimburse you for your home office expenses tax-free. Don't miss this. Here's the bottom line. The home office deduction isn't a loophole. It's a government recognizing that entrepreneurs are a very important part of the economy, and every deduction you properly claim keeps cash in your business. It helps you invest, and it helps you build wealth faster. Whether you're a side hustler, a consultant, or full-time business owner, this deduction rewards you for taking the risk and working for yourself. You built your dream from home. Don't forget to let your home work for you. Now, if this episode opened your eyes to just about how much money you might be leaving on the table, let's talk. Brister Law Firm helps entrepreneurs and investors find hidden deductions and design smarter tax strategies to keep more of what you earn. Visit bristertaxlaw.com. Go schedule a free discovery. And don't forget, subscribe to the Wealth Planning Podcast. Hit that subscription below for weekly strategies on taxes, asset protection, and building lasting wealth. Now, you're working from home, building that business. You want to make sure that you're getting all that you can from that space. Again, my name's Anthony Brister. Tune in for next week. We've got something special, and don't forget to subscribe. Thanks.